All right, everyone back in the gulag. Okay, so defining a downtrend, right? Now, the downtrend is completely opposite to the uptrend. We have when candles are making lower lows and lower highs. When price is trending bearish, it needs to respect the highs of the previous candles. This is really important. Let's say we have a resistance forming up over here. You have a candle moving bullish, right? Man, Rakil should have really made these colors better. Okay, so candles are moving bullish. We're approaching a resistance. Now, when candles are approaching resistance, when you have a candle forming like this at resistance, you have to understand now, since this candle is forming, there was a time when this candle was something like this before it closed, It was something like this. And when you have a candle something like this above resistance, when it's open, this is really important. When a candle is open and it looks like it's pumping through resistance, you have to wait for it to close. Because you never know, it just wicks down and closes under resistance. By a show of hands, who have gotten caught buying above resistance and seen candle close back inside? I know I have, man. I have. I'm like, man, shit, I got the best position, but in the opposite direction. I got to buy it, but it's a wick entry and price now dropping down. So it's really important. You always have to wait. Now, sometimes when you're looking at a high volatile pairs like GJ or GP or let's say like GU or USDZAR, some cowboys trade USDZAR, man. I don't know how. Salute to you if you trade USDZAR. But if you're looking at high volatile pairs, now sometimes price does break through resistance and it doesn't come back. It happens, and that's just the way how market moves. But most times it will always respect resistance. So what we're going to talk about is we're going to talk about the simple concepts, right? We're not going to go over what to do when it's breaking when it's not doing retests and something like that. So actually, we're going to touch on those things too. So let's say that you had this candle close and it closed below a resistance, right? Or actually it closed at resistance. Now, there's no buy over here. And the only reason there's no buy over here is that because the candle is closing with a small body, right? This is also really important. When you have candles closing with small bodies, most of the time it means that there's less volume, right? If a candle is closing bullish and it's closing with a small body, this is an indication that volume going up, it may be dying down a little bit. So that's when you can kind of get like an impression that, okay, you know what, this candle is weakening now. We might see a change in direction. So when this is a 30-minute time frame, or if this is a 1-hour time frame and it's coming up to a resistance and you got a candle closing like this, in my mind, I'm thinking that, okay, maybe this is where I can look for a sell. But I have to wait for a candle to close bearish. So if you have a candle closing like this, now you're going to say, okay, you know what? I got a candle closing bearish at resistance. This is a time for me to shine. Because not only this candle has broken the low of the previous candle, but it's also closed bearish at this resistance. Now, someone might say, oh, no, man, we're in an uptrend. We're at resistance. It's going to break resistance and I'm going to take buy. Don't listen to that person. That person may be right 10% of the time, 20% of the time, because if you got a 30-minute or the 1-hour candles closing under resistance with the confirmation of a bearish candle, there's a very high probability the next candle will respect the high and it will make a lower low and a lower high. Now, I'm not just saying this. We're going to go over examples as well, so you can see it works. And then, you have a candle coming down, just making a lower low and a lower high. Now, sometimes what guys may do is they'll be like, okay, well, you know what? I got a candle closing bearish at resistance, but I want to wait for a little bit more confirmation, right? And if you're one of those people who are waiting for a little bit more confirmation, you really have to take the chance. This is your confirmation right over here. This is the confirmation you're getting. If you're waiting for another confirmation, then maybe this is your confirmation. If this is your confirmation, and if you're taking a sell right over here, now your stop loss is right up over here above the candle high. When you're taking sells in mid-range, right? If you're taking sells in mid-range, not only that's risky because now your stop loss is a little bit bigger, but you're also taking a sell while the move is already half done, while it's already moving on that time frame. So now if you're taking a sell right over there, maybe you get maybe like 6-7 pips down here, and then what happens after that? You get another small move, and then you have a little bit of a retracement, right? But if you were taking sells right when you had confirmation, right, now you're in a much better position, because if you took a sell right over here, your stop is above the previous candle. Because your stop is above the bearish candle, because now you're not expecting the next candle to break the high of the previous candle. Very, very, very important. I use this concept every day. Every day I use this concept. If you have a bearish candle, you want the next candle to respect the high of the previous candle, which is why we have a downtrend. Again, I'm going to reiterate, a downtrend, price makes a low, makes a lower high, makes a lower low, makes a lower high, makes a lower low. That's an example of a downtrend. When candles are moving the same way, you have a downtrend. Just as we talked about when price is moving bullish in our previous example, we talked about, okay, you want to have a buy right at support, right? If you can't have a buy right at support because there's no confirmation, you want to have a buy when a candle closes bullish at a support. Same way here, when candles are moving down, you want to buy right at resistance. No, you want to sell right at resistance, right? So you're waiting for candle to close bearish. Now you're close to resistance taking a sell, right? Let's say you have a sell running at this candle right over here, right? Price is moving down, price is heading down. You're like, okay, perfect. You know what? We're in profits. I caught this 30-minute candle. I closed 70% of my positions, and now price is in profits. My stops are at break even. Perfect. If it runs for a swing trade, that's awesome. And now you have candle closing bullish, right? Now, if you're in sells, someone might say, oh, you know what? I'm going to hedge this position. I'm going to take a buy right over here. That's the worst thing you can do ever while you're trading. I've done this. I know a lot of other people have done this as well. You've been in sells and you've taken buys. You've tried to outsmart the market, but the market comes back with I don't want to say it, but this is just bad discipline right here. So when price is retracing, for a fact that if we're rejecting a higher resistance, maybe it's just retracing to make overall lower high. So as you see, as the candle bodies are getting smaller, and once you see candle closing in your direction, boom, you're like, perfect. I have a runner running. My runner hasn't gotten stopped out yet. So this is another, maybe an opportunity where I can enter another sell. Because now if I enter another sell, I'm expecting the next candle to respect the high of this candle. So now you're going to place your stop right over here. And when you're placing your stops, what I recommend in terms of risk is that, let's say if you have one lot running, right? Let's say you have one lot running at this position right over here. Maybe reduce your risk on the second position. Maybe you want to reduce the risk, because you have to understand the profits that you secured as price moved down, you don't want to risk those secured profits in the second position, right? Let's say you had a one lot and you secured $75, and now you don't want to risk $75 in this second position. Maybe you want to risk $25. If you take a sell over here and you have a stop loss up over here, you're telling yourself, okay, you know what? Let's say here, you're telling yourself, hey, Nate, maybe I want to risk $25 if price comes up and if it doesn't work out. So this way, even if this trade fails, overall, you've secured $50. Makes sense? But if you're risking $75 in the second one, and if price comes up and hits a stop loss, man, you've lost all profit. You've lost all profit. Like, not only you had money in your pocket, you've allowed the market to not only take money out of your pocket, but you've also allowed it to take even more money out of your pocket. So you really have to keep that in mind. A lot of people, they lose profits on second trades and third trades. You always have to secure profits. Make sure you don't put your profits on the line. I mean, you can, but not the whole thing, like maybe a portion of it. So you have a candle closing bearish, and now you're expecting the next candle to make lower lows and lower highs. You're expecting it to do that. Once it moves down, you're like, okay, perfect. I had an entry. Maybe I had an entry right over here. Price has made a minor resistance right over here, and now we may continue to go down. And then if price starts to go down, perfect. If price starts to come up, you've already secured profits. So you're adding entries in downtrends once you see a minor resistance is forming, provided if you already have a position running. Man, sometimes what may happen is, like, let's say if you have a sell running from up over here and a candle wicks a little bit higher and it stops you out. That can happen too. You might get stopped out. Someone may have a question in their mind, what if we get stopped out? Well, if we get stopped out, and if you're not getting emotional about the trade, you're just very calm, you're collected, you're like, okay, I got stopped out, no problem. If we create a minor resistance here, when a candle closes bearish again, I think I can take a second entry. Make sense? You can say, okay, you know what, I can take a second entry because now this makes sense. But if you get stopped out and you're getting emotional and you're like, oh shit, man, now I got to take a buy. You take a buy, candle closes bearish, goes down. That's no good. So you have to be very, very logical with when you're taking losses. You have to understand when you take one loss, right? The institutions, the markets, the brokers, they're all clapping. They're all clapping because you took a first loss, and they know now you will take a second trade and a third trade and a fourth trade, and they will start counting their paper. They'll be like, okay, you know what? This guy took a loss, and now there's an 80% chance he will take 6 more trades, and he will take 6 more losses, and he will blame himself about it. And we will just take his money and be happy about it. So whenever you take a loss, just stay calm, wait for the candle to close. A lot of times when you go full retard mode in the markets with losses, after the fact, when you look at the charts, you're like, oh man, you know what? This made perfect sense. I could have just stayed calm and maybe waited for something I should have waited on, and it would have been all okay. So this is my advice for anyone. Like, if you're taking losses, if you take first loss, just wait for the candle to close, wait for the 30-minute to close or wait for the 1 hour to close, and you will see something different. So perfect, right? We had candle moving down. Now, what will this look like on a higher time frame, right? So let's say you have a bearish candle, man. He really need to change the colors to red. Okay, so when you had a candle going bearish right over here, right? This is the start, let's say, of the 4-hour candle right here, right? Start at the top, which is the start at the top, either right over here or either right over here. It doesn't really matter, right? We have start on the top right here, and then we have a close. We had the bottom right here, which is the bottom over here, and then we have a close right here. Now, when this 4-hour candle closed, it wicked up to close, which means on a smaller time frame, you had a bullish candle, right? Which is why you had bearish, 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 4-hour candle moved down, and then you had the bullish candle. Right? See, price moved up, so the 4-hour candle moved up to make a lower wick. Right, which is very important. Candles make lower wicks and top wicks. And then now you're like, okay, for the next 4-hour candle to move down, you need the market structure to turn bearish, right? This is a problem which a lot of people have, is that now when you have a higher time frame candle closing bearish, you don't know when to sell. You don't know whether the next 4-hour candle, it may, let's say if it's going to go down, you don't know if it's going to wick all the way up over here, if it's going to wick all the way up over here, or you don't know if it's going to wick over here, or you don't know whether it's going to wick up or not. This is something we really have to learn, and the only way to know how far it's going to wick is if you can find confirmations on smaller time frames. Make sense? If you see the small time frames flipping in your direction, then you know that, okay, if the smaller time frame is now trying to flip bearish, this means the 4-hour candle now may continue to go down, right? So now this is why they say that, okay, you need to visualize the higher time frame, and then you need to execute on the smaller time frame, because you're looking at the smaller time frame candles move, basically. So let's just remove this, and let's look at the next 4-hour candle. Next 4-hour candle wicks up and continues to move down, and the 4-hour candle, this wick up was these candles moving bullish on the smaller time frame, and as the 4-hour candle started to come down, this was the close on the smaller time frame bearish, which gave you confirmation price may continue to go down. And then, you know, on the live stream, you're going to say, oh yeah, now look guys, this candle has closed bearish, and now we will come over here and the 4-hour will fill the wick and everything's going to be okay, and the candle moves down. And then you post it on Instagram and you're like, look at this. And everyone's like, oh wow, man, so amazing. So there's nothing amazing. You're just looking at the way candles are closing and you're just kind of like visualizing it happening, you know? So I think these were like really good examples of like downtrends and uptrends. I think after we're done from this webinar, you'll have to watch this like maybe 3-4 times to really kind of like understand it and like absorb the information. So let's move on to the next section. Next we have defining consolidation. You know, now how do you define